Good morning, traders and investors. I'm back home. I'm back from Puerto Rico. I've been gone since last Wednesday. It's really nice to be back. Now, Puerto Rico was amazing. Got a lot of great emails, got a lot of great pictures, brought back a lot of great memories. And it's the first, actually, this is the second trip my wife and I took without my kids in over 20 years. I just realized that a few minutes ago. Got to get out there more often, especially with my kids getting older now. Two of them are adults, but anyhow, welcome back. My name is Roger Scott. It's about 7:48 in the morning. The market's going to open up in about, let's see here, an hour and 41 minutes to be specific with you. It's about 7:48 Eastern time. It is, what is it today? Today is Tuesday, the 9th of May. My God, where has the year gone? Folks, sorry if I haven't been around the last couple of days. I have tried to answer all emails, and I've been doing my morning videos, but needed to recharge my batteries. Puerto Rico was amazing. I'll post some pictures in the Telegram channel. Make sure to follow the link in the YouTube Wealth Press channel. And don't forget to post comments under these videos in the YouTube Wealth Press channel. I interact. That's where I interact with you. That's where I do most of my interaction. So go to YouTube, type in Wealth Press, and you'll see every video. I post them at about 8 o'clock in the morning as soon as I'm done with them here. Now, as you can see here, the market's opening kind of lower today. Nasdaq's down 74 points. The Dow's down 144 points. Most of this is due to negative data from China, as I'll get into right now. Also, just to give you a little taste, yesterday we had PayPal earnings come out, and PayPal actually, I believe they did better than expected. The stock is up pretty good right now. Actually, no, it's not. It's down. Ooh, it's down, and they beat earnings. So this is not looking good, but they are at their support level, which means they'll probably end up bouncing higher. Although right now I wouldn't want to be trading. I usually wait about 3 to 4 days to start looking at stocks after earnings. Now, looking at the calendar, it's pretty empty today other than Fed speakers, but we're getting ready for the CPI that's coming out tomorrow before the opening bell. That's going to be the biggest report of the week, followed by PPI. The PPI will be impactful depending on how uneventful the CPI is. Sometimes the CPI is very eventful and you get no movement from the PPI. Sometimes the CPI is just depends on which one gives us more data. But I think CPI is going to be really important, and we have Jefferson speaking and we have Williams speaking from the Fed today. It'll be really interesting. Now remember, Aside from yesterday, you still have earnings, full-on earnings coming out today. The biggest companies, for the most part, not completely, for the most part, the biggest companies are done, but you still have a few here and there shaking us out. So just to give you an idea, you've got today, let's see here, not a lot today, but you have Airbnb coming out. They're disclosed first quarter report after Tuesday's close. Consensus estimates for vacation rental company to report earnings of about 8 cents per share, a loss of 3 cents than a year ago. Not too bad, and revenue up 18.7%. I'll do a full earnings review today in the VIP room to kind of give you an idea of where we're at, but I can tell you right now that for the most part, the numbers have been getting substantially better. And it'll be interesting because it'll give us an impact to see how much the bond market is going to move after tomorrow's report, depending on what is said. Also keep in mind, and I've brought this to your attention a few times, let me just clean this up. Be really cautious. Be really, really cautious. This is the 20-year plus bond. Anything over 10, 20, 30 year, they mimic each other. And you can see here, we're on the lower end of the range, and tech stocks are down right now. And if this breaks this level, and I've been talking about it nonstop, it already filled this gap. I actually just realized it yesterday right here. You could see that we did fill the gap and then went higher. I would be really cautious because there's no major catalyst for interest rates to go down right now. There is a catalyst for them to go higher right now because there's global weakness. And if we have weakness from the Fed tomorrow, and if we have some weakness from the earnings, there's a good chance the interest rates will go higher. And if that's the case, they'll break below this level. And if they break below this level and come down here, that'll put more fear and more pressure on the market. Lower bonds, higher interest rates. Higher interest rates, worse for the QQQ. Now, I warned you, I begged you, and I told just about everybody to be careful here. Typically Mondays, we see these days, as I showed you. See that? The algos, and then it takes us out. I'm not expecting too much strength from the technology sector right now. And if you look at the Dow, at other major indices, you will see that they're not really cooperating. You will see that the Dow has been cooling off. You'll see that the SPY has been cooling off. Now, the reason why QQQ has not been cooling off is because these three darn sectors, let me give them to you right now, XLY, they haven't done anything. They haven't moved up or down. Look at this, just consolidating. But it's not really moving in the right direction. Oops, sorry about that. XLK. Just kind of sitting there. Looks like it's making higher highs, but it's not. And XLC, same thing. They're not really moving in our direction. See that? They're just kind of consolidating. So I'm not liking these three sectors, and I showed you momentum levels yesterday. They're not looking all that great either in terms of momentum. So be really, really cautious right now with technology. Doesn't mean they're going to go down, and there's some really great stocks, like Oracle, for example. Let me show you. This is a great stock. But again, it just doesn't look like we have a lot of strength. Look at that. Nice stock there. But it doesn't look like we have a lot of strength coming right now out of technology stocks. I mean, a few big ones like Oracle, like Microsoft, NVIDIA, they're looking pretty good. But for the most part, the market cap on these stocks is starting to cool off. So there's always going to be some really juicy ones, but there's some nasty ones right now we got to pay attention to as well. Now let's talk a little bit about news, and then we'll round out everything today with strongest sector, weakest sector, strongest stock, weakest stock. How about that? That'll be fun, right? So S&P futures are down 0.38. Nasdaq is down 0.43 this morning as investors are digesting soft Chinese trade data. And remember, China is the biggest exporter in the world. So if their trade data is weak, it's going to impact U.S. regardless of what we want or what we think. We had CTLT come out with earnings, plunged 25%. Tyson Foods slid more than 16%. Zscaler, a tech stock, see what I'm saying? Climbed over 20% on cloud security. So things are really mixed right now. Federal Reserve Senior Loan Officer Opinion Survey released on Monday showed U.S. banks tightened lending standards in the first quarter and saw weakness in demand for commercial and industrial loan and commercial real estate loans. According to the report, the net percentage of U.S. bank tightening terms of credit for large and medium businesses rose to 46% in the first quarter from 44.8% in the prior survey in January. So, I mean, it did go higher, but honestly, I would expect more. I mean, we had, two more bank failures since then? It only went up 1.2%, so it's not really all that high. On the earnings front, Airbnb reported, Duke Energy reported, APD reported. It's easier for me to just say the ticker symbol sometimes. Oxy reported, Electronic Arts reported, or are reporting today. U.S. economic data is clean today. Tomorrow we're getting ready for the CPI, but we do have Government Jefferson and Williams speaking. Meanwhile, everybody's focused on consumer price data that's going to be reported tomorrow. In Europe, everybody in Europe is looking at China right now. Europe has been keying off the biggest economies in the world, which is U.S. and China. And they're digesting gloomy trade data, which cautionally awaiting the latest U.S. inflation data. So far in Europe, the markets are a little lower. China today closed lower as a gloomy trade data weighted on investor sentiment. Customs data released on Tuesday showed that Chinese imports declined sharply in April, while exports rose at a slower pace. That's going to hurt us directly and the rest of the world, indicating that domestic demand in the world's second biggest economy remained weak despite lifting COVID curbs. Well, guess what China does? They export, and if nobody's buying what they're exporting, or if it's slowing down, that's going to be directly impacted through them and the rest of the world. Japan, remember I told you Japan's going to be moving higher? Japan index closed higher and hit the highest level since 2022, January of 2022, boosted by gains in steel and shipping stocks, followed by upbeat corporate earnings. Bank of Japan Governor Uda downplayed expectations of an immediate tightening of monetary policy. But I'm telling you, their new prime minister, he's gung-ho in changing their economic conditions. And he's going to do that by commoditizing Japan, by increasing interest rates, and by creating demand for internal goods, not for shipping and exports, which is how you create wealth. PayPal, because what if exports are down? You're screwed, right? Like right now China is. Japan doesn't want that long term. They want to be a rich country based on their own projections and estimates. PayPal, here's PayPal, plunged 4% after payment reported upbeat results. That's what I thought. I thought they beat results, but they lowered their operating margin. Skyworks Solution fell 10% and Wayfair dropped 7% as less people are buying stuff for the houses, for the housing market. And again, you could see all the earnings that are coming out today. There's a lot of stuff. As you know, I'm right now looking at the 1-month highs because there's a lot of distortion with the technology, communication, and consumer discretionary. I'm really liking consumer staples. I'm really liking utilities. I'm really liking healthcare. I would be very cautious with financial stocks, especially regional bank stocks. Insurance, large banks are okay, but regional banks, be really careful. Be really careful with communication, technology, real estate, those REITs, you got to be really careful on. Industrial, be cautious on. And just to give you an idea, I really like consumer staples right now quite a bit. I like utilities right now. I like healthcare. Financials, I would be really cautious with right now. Like really, really cautious with right now. Industrial doesn't look like it's doing anything. Real estate looks like it's just consolidating around here. Technology still looks pretty good, but earnings are softening up a little bit. Energy, I would be cautious with right now. Basic materials, be careful with right now. And consumer discretionary, be really careful with right now. The top sectors are consumer staples, utilities, and healthcare. Excuse me, I got hiccups. And real estate. Now, the best stock and the weakest stock aren't always the same one and are not always in the best sector. Let's see if we can make some heads or tails out of this. So the number one stock right now, I'm going to give you a couple. I still love GE. I love Pulte Group. I like Las Vegas Sands. It looks like it's about to come up again. And I love Lamb Weston Holdings. So I just gave you 1, 2, 3, 4 stocks. And ACGL is still looking really, really good. On the other side of the coin, the worst stocks. Lincoln National, Generac, Match, but Match is already, it's matched out. This VFC Holdings, Boston Properties, Comerica, they look awful, and Xeon Bank. So you got Xeon Bank, Comerica, Boston Properties, GNRC is looking awful. This thing looks like it's going to fill the gap. Lincoln National, and this thing's already done. And it was on my list forever. The same stocks I've been telling you guys to short forever. Later today, I'm going to come out with my list of the most of stocks that I hate right now. Later on in Telegram, I'll post a list of my favorite long plays. Later today, I'll post that, and I'll also post a link of my favorite short plays. If you're in my Telegram channel, you will get that for free. I'll make a shareable link, and I will post that later. So if you're not in Telegram, go to the YouTube Wealth Press channel and sign up to Telegram. So these are the nastiest stocks. So instead of 1, I gave you 4. Now remember, be careful. Don't stay away. Be careful with technology right now, and try to stick with utilities, consumer staples, and financials, and maybe real estate. But be really, really careful. Now, before I let you go, I've got something important for you. Really important. Folks, billions of dollars flood in and out of stocks every day. And when a fraction of that money hits a single stock, that injection of capital has the potential to send it exploding higher in the next 24 hours. That's right. It's one of Wall Street's best kept secrets. That's why my really good friend Chuck Hughes held a special event to pull back the curtain and reveal how the rest of us can target these stocks. Follow the link below. Check out this session. Don't miss out. I really want you guys to see this. This is really explosive. It's very cool, and you don't want to miss out. Follow the link below. Check it out. And if you don't know where the link is, go to the YouTube Wealth Press channel. That's where I keep all the good links. Telegram and for these webinars. You'll just find it right before the call to action with all the descriptors. Folks, make sure to like this channel, the YouTube channel, subscribe to my videos, and comment and send me emails. Support@marketgeeks.com. I'll see you later. Bye. Have a great, great Tuesday.